Hello dear students, this is Mohammad Umair. I'm a teacher of accounting and business studies for IGCSE and A-levels, Cambridge, UK. Today we will be studying the definition of accounting as a formal introduction of this subject. This lecture is suitable for those students who have started their journey of accounting quite recently. It is equally good for those who have already gotten a background in accounting. For example, they might have already done IGCSE accounting course. So let us begin with accounting. It is a very interesting profession, and modern day businesses have a specific department that is allocated for accounting and finance. So what do accountants do? Accountants systematically record the financial transactions in the books of accounts, and they also then prepare the results or the summaries or the output in the form of financial statements. So accounting is a combination of two things. Number one, bookkeeping, and number two, preparation of financial statements. Together, they both are known as accounting. So you can say that accounting is bookkeeping and preparation of financial statements. Students can draw a very easy analogy from their school results. Normally students go through their O-levels, and if they are part of some school, they might be having quizzes, assignments, midterm exams or term exams. They might have mock exams, and finally their Cambridge exams. Right after the exams, all of the data that has already been collected in the past whole year, the school gives the parents and the students a result or a report card that mentions the grades and percentages of the students. So just like that, a business in which the investors or owners have invested money, at the end of 1 year or at the end of certain period, they might be interested in knowing how the business is performing and what is the position of the business. That is exactly what accountants do. Throughout the year, they keep recording the transactions, which are commercial events of exchange, buying and selling, and later, at the end of certain periods, which is usually 1 year, they produce the summary or the results, which are known as financial statements. Let us now analyze each of the components separately. What do we mean by systematic recording? Well, by systematic we mean that we would do accounting from the perspective of a system that would be followed. It is a general convention among the accountants that they record the transactions in a specific or particular manner. That particular system is known as double entry accounting system. We will learn about it later in the future lectures. What is double entry accounting system? And that becomes the backbone of accounting. Secondly, this definition is also saying we have to record certain transactions. What do we mean by recording? A record is anything that is in digital or written format. For example, we are recording right now a lecture. So a record can be in written form, and nowadays with the advent of computers, we can have digital records of accounting as well. There are plenty of very nice softwares available, but for the Cambridge course of IGCSE and A-level, we are not required to use any software. We just study in order to have are theoretical foundations covered. We also use the word financial transactions. So a financial transaction is a transaction or any commercial event of exchange in which money is involved. We know that good employees, loyal employees, efficient employees, loyal customers, these all things contribute towards the success of the business. But we can't quantify them in terms of money. We can't express them in terms of money. So anything that is not expressed or easily expressed in terms of currency or money, we won't record in the books of accounts. So we would only record financial transactions. For example, if a business has hired a new employee and that employee has not served yet, there is only a formal invitation to join, so that would not be construed as a transaction. But yes, if the employee has served for 1 year or 1 month, now there is a transaction. The employee has given the services, and as a result, the company is liable to pay the employee the wages or the salary that has been originally decided. So we would only record money related or financial transactions in the books of account. What does the word financial mean? Here we would mean money related or something that is monetary in nature. And transaction is any commercial event of exchange. Commercial event of exchange. Most of the students might come across their parents or themselves getting money through ATM. They think that only ATM transactions are the transaction. Well, partially it is true, but a transaction can take a number of forms. For example, buying and selling of goods, it is a transaction. If you give or take a loan, it is a transaction. If you pay wages to your employees, it is a transaction. So transaction can take a number of forms. It is not limited to the transactions that we are familiar of. And please remember, accounting is the language of the business. Just like we say mathematics is the language of the universe, accounting is the language of the business. In business, we talk in terms of accounting. So, we have also written down that we will prepare financial statements, which are just like school results or transcripts. So imagine that these are the transcripts of the business. How did the business perform during the previous period, which is usually 1 year. A period can be different as well. It can be a quarter. In some countries, it is legally mandatory to publish the financial accounts or the final accounts or the financial statements, which is another name for final accounts. So, there are 5 financial statements that you need to prepare. We also call them final accounts. There are 5 of them. Number 1, income statement. I'm using the abbreviations to keep this video short. And second, statement of changes in equity. Third, statement of financial position. Fourth, statement of cash flows. And the fifth are the notes and disclosures about the previous 4 statements. So technically there are 4 statements, and the 5th one involves the calculations involved in the previous 4 or any other information that you want to supply which was not covered in the first 4. You can give it in the notes and disclosures. Those students who are studying IGCSE or O levels, they come across only the first three. They have to prepare the income statement, changes in equity for companies,